All right, good Tuesday morning, peoples. Let's see, let me get the right sheets up here. It's Bruce with Targeted Wealth Creation. So, by popular demand, and I think this is a popular topic, so let me knock it out. Yieldmax is once again going to implement some changes or some additional strategies within their ability to manage their funds. And I think this number one comes from them wanting, they're doing fabulously. They're ranked number 31 when you saw my ETF and all ETFs with BlackRock and Vanguard and being the two biggest and many more big ones. But they're growing like a weed. They've got 49 ETFs. They're 11.83. So whether you love them, like them, hate them, I've gone through an absolute love in recognizing what they were doing to being mediocre. I never hated them, but I got disappointed in them to saying, hey, they're not perfect, but they've shown me that they're willing to change. In other words, let's review what they've been doing and I'll break down for you what others are doing that are perceived better and what I think they're going to do to modify and actually show you SE filings and get into the nitty gritty here and explain how it works, because that's what I do. Okay. So, what has Yieldmax from the very beginning done? Well, what they did was created, and they named it aptly, Yieldmax. They were very good at maximizing income generation. Before, you bought a growth stock and you said, hey, in 2 years, guys, my growth stock's up 4.5x. I'm rich, right? And then maybe you sell some shares because now you're in a capital gain situation, but you're caught between it's going to the moon, right? The FOMO. So people need cash. Look at where we are as a society. Everybody gets stimulated by an inflow of money. Well, what's the hardest thing to ascertain in the environment? It's money. Inflation's been here, wages haven't really followed suit. So I don't have to tell you, you people are telling me, and you're telling these ETF companies that you want to get paid, and you want to get paid from monthly to weekly to probably daily, some of you, right? And that evolution, and one guy does something, or one ETF company does something, and then everybody else is sort of forced. So I think right now Yieldmax is playing defense, but they've been fabulous on the offense because you talk about a plethora of funds. They got a plethora of funds. I'm not a big fan of Yieldmax. Yield Mag when the Mag 7 are undervalued. I think the Mag 7 are massively overvalued. They're not going to crash, but you know, that's why I'm not in Y Max or Y Mag. But let's just get into how they do this, guys. So I put a little something over here. I did this in one of my Options 101 videos when I first created my channel. So without getting complicated, because options scare people. That's why you put your money in a Yieldmax or Defiance or Roundhill or somebody. Let them do the work. Now, I know some of you techies out there, like I was an engineer. I loved options. I studied options. I found them, almost 40 years ago and been using them ever since, along with many other things and understanding sectors. So in options, it's all about leverage. So again, I always tell this story. If you had a neighbor, and this actually happened to me, I'm not going to tell you whether I did something or didn't do something, incriminate myself. I'll take the fifth. But bottom line, I heard a story, okay, from a pretty good source that a major company was about to make an acquisition. And the acquiring company was a publicly traded company. So when I got wind of it, okay, I thought to myself, I didn't have a lot of money. I was young in my investing. I knew I had already finished my options course, but I was in, maybe late 20s, maybe early 30s. It was so long ago. And I thought, I got this as pretty good info. But again, this person overheard a family member who was CEO of the company and was too young to do anything about it and was telling a neighbor. Then that neighbor was telling me. So I was getting it secondhand. I lived in the community, but I was like, should I take a risk and go buy some call options? Because to buy the stock, it was a $50 stock. How many shares could I buy? But on options, I can go out and in theory, again, I'm not going to commit, I'm going to take the fifth. Um, by doing an option play, that stock the next day when the news came out, the acquired company went up like 22%. Well, if you can get 22% and buy a call option right at the money or a little bit in the money, you're in the money. The return was like a couple 100% on the money, but it's risk. What if the person misunderstood what they heard, or what if it really wasn't going to happen? They were just talking. But again, it was secondhand through secondhand, and but I'm still not copping out to it, people. But so that's the power of options, right? So let's get into what they were doing. So a mutual fund, for the longest time, you bought a mutual fund because you wanted safety. They invested in a bunch of stocks. I'm going to move through this quick. So fast forward to today, an exchange traded fund. The rules haven't changed, but they say you can't just go buy a single stock and put all your money in a single stock and call it an ETF. And you're like, look at all these single stock ETFs, Misty, Coney, they're all based on single tech stocks, Apple, Microsoft, Palantir, Nvidia, Tesla. Well, look at some of this. All right. You cannot have more than 25% concentration of funds in a single security. So that means out of all the money you pulled in, you can't, well, how can I go long a significant amount and have leverage on the underlying? Oh, I could use options. Well, that's exactly what they do. And how do I doubly go long? Well, and utilize the least amount of my cash. Well, if I'm bullish, and I am, remember they always say on Yieldmax and any of these income funds, they are targeted to make you a lot more money when the stock's going up. When it's going down, you're going to go down 90% of how far it's going to go down. Maybe 95, maybe 98, depends on the income. But if you want to play a stock going up, if it roars up 30% in a day and then the next week it's up 35%, the way these funds have been positioned, you're probably going to get 1/3 of that. You're going to get about 10% of a 33% move, or 11% of a 33%. They can't keep up. But you're going to make money. You're going to get paid income, and your fund is going to go up, but nowhere near what the underlying does. But now you got income and some growth. But what's the bad? Why change it? Well, they came out. So they have two things going on. They created a synthetic. That's basically going long the stock through option. Not only do you buy a call, because that's what most people do, but then they sell a put to offset the cost of buying the call. So say I'm at the money and I have to buy the call at $10, but I can sell the call at $8 a share. So essentially, I went long in options by only spending $2 a share. So I can beat the 25% concentration rule very easily, guys. That's why I'm telling you these details. But what did they do besides that? By the way, guys, that doesn't generate any income. That just makes the underlying fund go up, right? It doesn't to really, I mean, I know they can sell synthetics at some point and collect cash, but those aren't typically done on a week. Those are 1 month, 2 month when they put on these synthetics. Just leave the synthetic there, right? Let it ride. But you get the idea. I'm not saying it never makes money, but it's not going to be a weekly payer that way. And they have to force to sell it, which I think can hurt the situation, even to pay on the monthly. So they came up with a second strategy that pairs with that: sell calls. Well, what is under the call sell? That's a bearish bet. But what it is it's saying, oh, okay, I'll give the stock 5% room to run in a week. And I'll go out, say the stock's trading at $50. I'll sell a 55 call. So if it only goes to 54.99, I made all the money that I sold the call for. Now they're in the flex market and they gotta buy them back. You and I can sell a call, it expires worthless. But they're in a commercial market where you have to do, 150,000 contracts a month or more, and all this big amount of money invested. That's what institutions utilize, and that's what these funds, and that's what Yieldmax and Tidal do. They play in the flex marketplace and what's known as the European option. It's really American options, but it's a European, what they call a European settlement. You settle in cash, you don't get the stock put to you. But in our retail world, we would have it put to us. So anyway, I won't belabor all that. But they started by selling naked calls. I call them naked calls. They call them covered calls, but technically they're not really covered. They don't own the. That is the true definition of a covered call: own the underlying and sell the call. But they didn't own it. They had a synthetic on it. So they were covered in that way, but it's not traditional. So that was just a bugaboo that I had. And then, kudos, they came along and said, this isn't always working. Our people are upset. Palantir or MicroStrategy or something. Man, that thing went up 35% this week, and we did best of being only 10% up in the fund. You're going to get a nice paycheck, but they were getting a lot of heat, right? And they don't want people to run out and just buy MicroStrategy. And most people can't write their own calls. A certain percentage can, but you know what I mean. So that happened, and then we got to where they introduced spreads. What are spreads? Real fast. So you now sell a call, but you buy a higher call. So you sell that, if the stock's 50, you sell that 55 call. Now you go out and buy a 65 call. It's cheap because it's well out of the money. You're going to cost you a lot less than what you got for selling the 55 call when you buy it. It's insurance, because if that stock runs to 80, it's going to fly by the 65, and now you're in the money. You're going to make a bunch of money. That's okay too, but that doesn't keep the NAV good if the stock is going down. Okay, and there's little ways that you can make the NAV. For instance, Curve sells a call way out on. They do a synthetic, and on their naked calls and their spreads, they go out a month. So they only have to be right once a month, not right once a week. So they don't have as high a premium, but they tend to be closer to the NAV. Well, up comes Roundhill. Roundhill introduces weeklies. They did it on their funds, on the index funds. And in those, by doing weekly, you literally sell ODTE, right? After the market opens, you sell it. You only hold that call for 6.5 hours during the trading day. You buy it after the market opens, a half an hour if you want, whatever. Let the news happen before the market. Whatever it's going to do, up, down, you get in. And then you close, because what happens when earnings get announced after the market? Nobody announces earnings during the trading day. So you are able to reset and be closer in the scenario. That's not where I'm going here, but I just wanted to explain to you that there are new approaches. So then Roundhill came out with their weeklies, okay? On Coin, on Nvidia, on Apple, on Tesla, and on one of my favorites, Palantir. And lo and behold, they're doing pretty good. I just put out an analysis video, right, yesterday. And when I looked at it, I said, wow, they're not paying as much as Pulte. Just take Palantir as an example. Okay. But boy, their NAV is holding strong and they beat in total return because of that. And measured in both cycles were exactly the same. So I said, wow, I liked Pulte, right? Because I like Palantir. You got to be bullish on these funds if you're going to, chase them in Yieldmax. Just like, you know, MSTR, I'm misty on MSTR. That's why it has the highest assets under management, because it's just performed. MicroStrategy and now Strategy and Michael Saylor. BTC's averaging 65% gain a year. You buy an income fund all day if that's what it's doing, if you need the income. All right. So fast forward to right now. In order to put those spreads on, these ETF companies have to go out to the SEC, and there's an Edgar database. So I searched the Edgar database, and they went out and they added call spreads and said, hey, on all of our options, we want flexibility to do naked calls, spreads, other types of options. Okay. And so that helped them better, but not good enough, because now Roundhill has shown them. Well, guess what? Let's take a look here. Let me get this for you. All right. I wanted to show you this, people. This is real stuff, not something I made up. So it's derived from the Franz prospectus, right? So you see Title Trust, right? Because that's kind of the parent company of Yieldmax. There is no real Yieldmax. That's a marketing name. Title's sort of the parent entity. And then they have all the service companies like Zega for their option, somebody they hire to pay the bills, a legal law office to defend them, blah, blah, blah. But look right here on May 12th. And they're doing this one happened to be misty, but they're doing it pretty much across the board. Okay. Additional investment strategies. In addition to the option strategies described herein, the fund may use the following additional strategies to gain exposure to the underlying security. Swaps. The fund may utilize swap contracts that provide exposure to the underlying security. Additional option strategies. The fund may use. I think they thought they covered them all, but they deemed it necessary to say, well, if we want to go deep in the money, we're selling calls out of the money. What if we just want to buy calls? The stock's trading at $50 and we want to buy a 42. We're well in the money. And if it runs to 60 or 70, costs us a little bit more money, but we're right there in the money all the way when it moves up. Well above the strike price. That's what they mean by deep in the money. All right. Equity securities. The fund may purchase equity securities of the underlying security. All right, guys. So wanted to show you that, right? And I've been pretty good at searching, using the Edgar database, and you have to know various names and dates and how to search it. So I spent a fair amount of time in the past doing that, so I was able to reconstruct that. All right, you find when they file for new names, but guys, that doesn't, like Roundhill's coming out with a bunch of new funds. But there's funds they've also filed for that they haven't elected to launch. And so has Yieldmax. I know Jay on several interviews said, oh, yeah, we filed for this one and this one and this one. But we're trying to see when the market fits launching it. Or we're not sure, based on other funds in that category, that the assets under management is a waste of time. If you saw my video, guys, did you know, if you didn't watch that, today, MSTR, or Misty, right, who sits on top of MSTR in title, out of the 11.83 assets under management, 11.83 billion, 3.84 is in Misty. That's 32.4%. That's almost 1/3 of the entire Yieldmax assets under management. So when you get a hot company and a hot product, you go with it. Now you're starting to see MST. You're going to see Roundhill with the single stock come out on MSTR. Okay. And guys, they don't want to lose all that money. So there, but again, it's not only MSTR, it's Murney, it's a bunch of these guys. I'll go back to my ETF stuff and show you how bad some of these funds have Nav eroded. Look at Ulti. I know it's still popular and it has a hell of a yield, but that thing's gone from $20 to $6. In my book, that's a big Nav loss. Okay. And I know guys always say, yeah, but Bruce, my average price now is 6.7 and I'm getting 100% yield. Well, that's fine if it doesn't go to $1 in 3 months. And I have no idea where it's going. If crypto stays hot and they manage it right, maybe it gets back to $10. Or do they do some of these new methods? Because Ulti has tried about 5 different methodologies, right? At one point, they owned 50 stocks, and they were writing options on top of them. Then they started doing spreads, and not necessarily doing synthetics. So here's what I want to tell you. And here's what I think the impact's going to be. First off, this is what, so why did they write language like this? Well, first off, what are swaps? Okay. Swaps are sold in the over the counter market, but by buying these big tech companies, they're more liquid, but they also can get illiquid. So is there risk? Boy, go read the risk prospectus on Roundhill and then read it when they come out on Yieldmax, because Yieldmax isn't doing it yet on any fund, but when they do, they'll rewrite the risk. Okay, there's a lot of risk, but hell, there's a lot of risk on anything. There's risk on synthetics, right? If that stock tanks, you're going to go down with it, right? There's no income on a synthetic that gets underwater. All right. So the additional options is just another strategy to be long that stock. This is key because if you're going to do swaps, you don't need to do a synthetic because the swaps will help you with income and then you want to own the underlying. Now, I don't know how they get by the 25%. Do they use less fund? It made a lot more sense to me when they were doing the synthetic and everything was options because you have over 75% in treasuries. Okay. So I took Roundhill. They've executed this very, very well. So guys, I'm about to show you what I have for Roundhill. And then you see it on my screen, but let me show you here. This is out on Roundhill's site. Here's PLTW's ETF holdings. What do they own? They own the stock, right? There's 38,362 shares, so 19.24. Remember what I said about staying below 25%? Swaps, weekly pay swaps. I didn't even know they had category of swaps that were weekly versus monthly and so forth, but they do. I know a lot about swaps, but not all that. So they got 202,000 shares of that. And then what do they do with their money? Instead of just pure treasuries, they're in, I forget the First American. Yeah. My brother in law was an executive with First American. So he was kind of proud when I told him, oh, yeah, besides treasuries, US government treasuries, they're buying those. Oh, yeah, that's a good product. Basically, it's just a higher yielding, type of money market, if you will. And so they park cash there. So that is what is happening, my friends, on that front. So let me go back and showcase some other things and then tell you what I think the impact's going to be and if it's positive or negative for Yieldmax. All right. So that same sheet I just showed you, I filled in over here, but I wanted to show you I'm getting this from valid and good sources. All right. So I'm trying to find if I have in here. This is Roundhill. Let me see where Well, that's other stuff. Where I have, well, Roundhill's coming out with some new ones, right? They've had these for a period of time that aren't launched. The green ones were the ones that they launched. Uh, and then they had more. Now they have a whole nother list. Somewhere I have that list. Sorry, guys, I'm going back through some other things, and I want to find one more. Okay, and here's a case of where I showed Granite, and Granite's using a new interesting methodology. Okay, I don't recall exactly what it is, but their main thing is they're using a leverage. They're using a 2x. What is Roundhill doing? Roundhill is using 1.2 leverage, okay, and they're doing through swaps. You can make the swaps take you up to 1.5 or 2, and that's what Defiance is going to do on MST. Okay, they're not doing it through synthetics. All right, there was one more. I got to find this. Sorry, guys, I got so much stuff in here. That's something else. Okay, on this comparison, yeah, I have one where I'm comparing Pulte. I wonder which, it's got to be one of the, oh, it's got to be one of these sheets. But is it in a different tab? Yeah, here it is, guys, right in front of me. So here's their 5, but they're all from the same. So what I did, because I like Pulte, I wanted to run within the Roundhill. And I showed this in a recent video. I wanted to run, what did Palantir do? What did Pulte do? And what did PLTW? Well, PLTY has been out for 6 months, but PLTW has only been out since 2019. So if you're going to compare something, you want to make sure you're comparing out. And they pay weekly and Pulte pays monthly, but I can make that work. I just accumulate the dividends over here, and this one collects them on a weekly, and then this pays on monthly. So I can't use Pulte's May, although that'll be on Wednesday, and I haven't yet done this. So when I do that, I could go show that, but I got the weeklies and I got the monthlies, right? Across these. So you had a monthly here, you had 4 weeklies, another monthly, 4 weeklies, another monthly, right? You'll have 4 weeklies and another monthly. But these are just a few days away. But I wanted everything to work. And then I said, all right, so here's Roundhill, here's the launch, here's the price. Look at this, guys. And this is what you see in the difference. This is what Yieldmax wants to get to. You've got a flat, and this is a horrible launch time. 219, you're at the peak of the market, and then March and April just beat the crap out of you. And now we're coming back in May and started, I think, near the end of April. But look at this, 44.24 on launch, 43.93. So, and it's even up, I think, this is 2 days now ago. So it doesn't matter. We're close enough. Minus 18. What's the underlying? Up 15.58 through the exact same time frame. Okay. Now, how did you do in terms of payments? Right? Here you go. This is Bruce's claim to fame. You know, what is the NAV gain or loss? What is the yield and the amount of money it earned? And therefore, you add those two together and you get total return. Well, who won? And Pulte pays like out of this world. 21, well, oh, you know what? I plugged this in. They weren't even close without it. I said, well, it's so close, but let's take it off for a minute because they haven't really paid it. I mean, they haven't paid it yet, right? So the total return is barely green on Pulte through a terrible time, guys. All you got to, well, yeah, but Bruce, you picked the worst. Well, that's when PLTW launched. But look at it, at a 10.69 total return. So it's 10% better in how many days? So usually I have the days somewhere in here, but it's less than 90, probably 85. Oh, Got 90 up here on those. But I'm also, yeah, depends on, yep, 90. Okay, I knew it was close to that. So look at the distribution. They earned 11.39, 18.30. So they're clearly outpaying. And then you see that jump when you get a big $6, because what are they going to get? 30, 40 cents, 45 cents or something. So there's no question who's paying more. But I think they're going to try and tweak this mix a little bit and play around with this. I could only imagine if they did both strategies. If they did a synthetic and a small amount and did some contracts and did a spread and did swaps, I assume you can do both. Boy, I don't want to be the one reporting on it on my daily. Like right now, it's just not worth it. I mean, I need to spend more time buying and selling and analyzing and working on my channel. It's already a lot of work, but it's a labor of love. So I'm doing it again for Coney and Pulte, and I really want to do Misty because I love Misty a lot as well. But guys, that's the purpose of this. So hopefully this helped you. Sorry to be so long, but a lot of this stuff needs to be explained so you really get it. Okay. And that's what you have here. Look at this PLTW, total return. I don't know why. Um, it's greater. I don't even get into that subject for the moment. All right, guys, this is Bruce with Targeted Wealth Creation. Hit me up. This is how I ended up doing this latest thing to say, what's the impact going to be on Yieldmax? What can we expect? I think the final summary is I think you're going to get less Nav erosion, maybe slightly lower yields, and maybe what they do is say we're going to have different flavors of this fund. Who knows? So then you can pick. They're already doing that in Defiance and Yieldmax and doing these targeted and some of these other kinds of things. All right, I'm going to let you go. I got to get into the trading day. We got an hour before the markets open. All right, guys. Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a great one. Bye for now.